I'm at Fifield, Cyprium Metals. Cyprium, we are working to restart the prolific past producer, the Nifty mine. So we're a brownfield copper opportunity in Western Australia. A little bit about the company. We're roughly $70 million market cap, $130 million enterprise value. We're listed on the Australian Stock Exchange under CYM. We have mid-teens cash, and we're also carrying some legacy debt with us. That adds some fuel to our current plan to restart, and you'll see us breaking ground and getting to revenue within the next 12 months. So if there were three things that I would sort of want to have you leave with today, one is that brownfield delivers just an unbelievable advantage in terms of spent capital, time, in particular time, and then also this is a scale opportunity. We'll spend a little bit more time on that. The second is that we've put together a great team to execute this restart. From our offtake and marketing partner, Glencore, through to our mine operations partner, McMahon. We're just on the edge of getting this back into production. And then the third is that we've been radically mispriced, which is to say that when you compare either the fundamental value that we're creating or the replacement cost of what we have, or where we trade in line with peers or some of the M&A that's happened recently, you'll find that we're trading at a fraction of where we might be. So this is a pivotal moment for Cyprium, and this is a real opportunity for investors. Let's step back and talk a little bit. Okay, so this is our tenement map. This is in the Patterson. Effectively, this is an irreplaceable tenement map. This was put together by WMC and MIM in the 70s and covers the entire western side of the Patterson province. We're in the district of Winu, we're in the district of Telfer, and we're in the district of Nifty. And these tenements cover most of the mineralized areas. Many of it's held by mining lease, and a lot of it by state agreement as well. There's about 1,100 kilometers of drill. To put that into perspective, if you laid it end to end, it would take you from Noosa to Sydney. So there's a huge amount of data, and we're just getting our hands wrapped around that. And there are two big projects in here for us. Both of them are sedimentary copper, which means that they're large scale, and where you find some, you find a lot more. Today, we're going to spend most of our time on the Nifty mine. So Nifty is a sedimentary copper deposit, and it was found the old-fashioned way. It was sticking up out of the ground. So WMC found it in the 70s, and then in the 1990s developed an open pit to mine the high-grade oxides and process that into cathode. And what you saw was that there was about 220,000 tons of cathode produced. When the pit ended in grade, but the metallurgy changed from oxide to sulfide, then there was an underground mine that was developed, and about 500,000 tons of copper was produced from a high-grade underground mine. Normally what you'd expect to see in this situation is an open pit ending in grade. You'd build a concentrator and keep going, but because of the high-grade underground, it went straight to the underground. So what's left there today? Well, actually, there's quite a lot left there today. We've done a lot of work over the last year looking at mineral resources and plans for redevelopment. And there's 91,000 tons of metal, of which 44,000 of it's in reserve, left in the heap leach. It was a very high-grade heap leach that was truncated early. And so our plans are going to be to go back and releach some of that cost-effectively. Second, there's a very large remaining reserve between that underground and where the pit stopped. And that just is begging for an open pit. We had a PFS out last year, and when we brought McMahon on as a partner, they agreed, and we're working through the BFS to restart concentrate operations on that. The third thing that's very interesting from the aspect of time is we maintain this as an active mine site, and there are just so many permits that we don't need to have because we have them in hand. So we're effectively fully permitted for the releach of the heap leach, and then we'd need to trim and amend some of our permits to ultimately go into the concentrate production. So when we talk about advantages of time and infrastructure, this is what the SXEW looks like last month. It's actually, so the last time it operated was 2008, but over the last year we've had two Class 2 estimates, basically walking all of the pipelines, understanding exactly the work that needs to be done to put it back into production, and everything that requires motors, so pumps, valves, PLC controls. There's about $10 to $12 million of kit that needs to go back in to repower this, and then it's ready to produce copper. That takes about double that to install it, and then sort of double it again to get the open pit, or sorry, the heap leach reactivated and working capital. So we look at this as about a $40 million capital project, and it's wildly accretive to shareholders, right? So at a very modest 45 to 50% recovery, what we're seeing is this has the potential today to generate 6,000 to 7,000 tons of copper starting next year, and that in what you see on the aqua bars are the forward curve, and in the blue bars, 425 copper and 71-cent FX, which is substantially below where we are today. So when we ballpark this, it's sort of like a $40 million a year opportunity, total project life, 7 years, 1 year payback, gets cash flow up and allows us to service our debt and set up for the big open pit. On the concentrator and open pit side, we have a 3 million ton a year concentrator sitting there. It's been continuously energized since 2019. So that means that the air conditioning has kept all the high voltage electrics intact. There are some things that we need to do to turn it back on. There's a wooden floor, for example, in the control room, and that's out of code. We need to work on some of the rotating gear, but it's very fast to bring this back online. And so what we've been doing with McMahon is working through what's our most cost-effective way to bring this online, both in terms of capital and speed. Go to the next slide. What the open pit represents, that 83 million tons at 1%, this is a mine that's effectively the size of Metals Acquisition Corp. It's kind of just sub 40,000 tons a year. That's, I mean, it's a true at-scale mine that delivers both duration and strategic value. From our PFS, we've been able to declare a 20-year reserve tail. Again, to get it up and running, it's kind of 2 times EBITDA to get it up and running for a 20-year project life. And that's just what brownfields continue to deliver. So last year was a very busy year. We were extremely inwardly focused. We have one equity research analyst covering us, but we refinanced the balance sheet. We upgraded the board and governance. We embraced our partners at Glencore and McMahon and continued to move all of our technical details into readiness. Today, we're sort of right at that crux. You should expect that in the next year, we're going to execute this project and get ourselves into revenue. And part of the reason you should expect that is we've just been graduating from problem to problem. It's not the absence of problems that make a good business, it's the ability to move through those. And I think we've been demonstrating that pretty consistently. So that is our key outcome. Our key outcome is to transition our business, along with McMahon, from a developer and an aspirant into a producer generating cash flow. So when you kind of look out at our valuation, 100 million, 130 million enterprise value, what you see is that we're just really different, both in terms of our scale, but also in terms of our valuation. And when you kind of look across what's been happening in the copper sector, all of the people in the scale and range that we are have been being acquired. So we're in some ways an interesting way to get leverage to this copper cycle right now, and to also see the asymmetric growth in the company as we emerge from producer into a producer. And then you can kind of back triangulate and look very clearly at where we ought to be rated versus where we are today. So it's an exciting environment for us to be a part of. Obviously, I'm making some forward-looking statements, so take those with caution. We have a booth, and I'd love to see you. So thanks for the attention.